Prime Minister, ladies and gentlemen, welcome to the World Economy session. This is the session we all have been waiting for. Everyone wants to know what is really going on in the world economy, and we are going to tell you. We make two promises. One is at the end of this session, you will know more about the world economy than you do now. And second, we will finish at 12:30 sharp. We shall see which one of these promises is easier to keep, but we'll try to keep them both. Explaining what really is going on in the world economy is a tall order, but we do have a magnificent panel here. Starting, of course, with Prime Minister Taavi Rõivas, Prime Minister since 2014, at the time, the youngest head of government in Europe. And what a wonderful job he has done. We look enviously from Finland across the Gulf because Finland used to be the model of European competitiveness. Nowadays it's Estonia, and that's very much thanks to the good work that you're doing. So enviously, but nevertheless, for these purposes of this session, we're pleased to have you. Then we have Anders Åslund. Anders Åslund is a senior fellow at the Atlantic Council. He's one of the best-known experts on Russia and Eastern Europe and has been that for a long time. Written 13 books, edited 16, that's what I read. Has advised governments in Russia, Ukraine, and certainly is somebody who can very much help us understand what's going on in this part of the world. Then we have Alan Riley. He's the oilman here. He's senior fellow at the Institute for Statecraft in London, and also a non-resident fellow at the Atlantic Council. Atlantic Council seems to be propping up everywhere nowadays. His main areas are energy, trade, and antitrust. And then we have Sergey Aleksashenko, non-resident senior fellow at Brookings institution. In the 1990s, he was a key reformist player in Russia as Deputy Minister of Finance and Deputy Governor of the Central Bank of Russia. Later, he went to the private sector as head of Merrill Lynch Russia and is nowadays based in Washington, D.C. And doing a lot of advisory work as well. Now, I will say just two words and then give the floor to Anders, who's going to start. Prime Minister and I had a chat, and we thought that we would like to start with you, Anders. But first, the context. For the past 50 years, the world economy has grown approximately 4% per year. For more than 50 years, that has been the growth rate. Now there's a prediction that for the next 50 years, the world economy is going to be growing about 2% per year. Why? How much work we do, how much productivity, those two things we put together, that's growth. And there are very serious institutions and people who say that indeed this is the slow growth era that we are entering. And this is one of the issues that we should be discussing. Is it really so, or can some things like technology and new business models help us escape from that? Second point, and then we'll start. Since 2008, the BRICS and high commodity prices have kept the world economy floating. Is that likely to be so in the future, or is there a sea change going on? With these words, Anders, would you like to start and give us your thoughts on the world economy, please?
Thank you, Risto, and thank you very much to the organizers of the Lennart Meri conference. It's a great pleasure to be here once again, and it's very impressive to see how this conference becomes better and better each year, and always extremely relevant. My view of the world economy is that we are really seeing a sea change, as you suggested, Risto. If you take the period 2000 to 2013, the emerging economies grew by an average of 6% a year, and the US economy by 2% a year. This will not happen again. The years 2003 to 2007 were probably the years of highest growth in world history, and that will not be repeated. This was a period of basically good, well-functioning global economy in so many ways, but also a massive oil boom, a commodity boom, and a massive credit boom. These will not last. Oil and the commodities move in quarter-century-long cycles. You have prices going up for about a decade or so, and then they stay low for a bit more than a decade. For the last 100 years, on average for 11 years. So expect at least a decade of low commodity prices. That will take down many emerging economies. The emerging economies have continued to boost lending enormously. The mistake that the Western world did that led to the big blow up of 2008. We should expect more of that now in the emerging economies. I know that Alan will talk about it with regard to China. And what should we expect for the future? I think that we should look backwards, not to this millennium, but to the 1980s and the 1990s. What did we see then? We saw in Latin America a lost decade of a debt crisis and general mess in economic policy with hyperinflation. In the 1990s, well, we had the whole post-communist transition problem. So how will this look in the future? What matters? I think that what will matter for the future is good governance, freedom, democracy, control over corruption. Who has that? The European Union, and I may say particularly Estonia. Estonia is among the post-communist countries the country that has managed to control corruption the most. And also Estonia has the highest expenditure on research and development among the post-communist states. The other thing that I think will matter is there is a new book now by the Dutchmen Antoine van Achtmal and Fred Bakker called The Smartest Places in the World, saying that what matters today is no longer low wages. Low wages are important for elementary manufacturing, but we are now in the world of Google and Facebook. What matters now is smartness, creativity. For that, you need freedom and you need very good education. So, and where do you have the best education? We have two lists of the top universities in the world, Times Higher Education Supplement and the Shanghai list. Out of the 50 best universities in the world, 30 are American, 6 or 7 British, but there are only 4 in continental European Union. This is a shame. This is where I think that the European Union should really focus on getting top-level universities as Britain and the US. This is the weak spot, but this can be overcome. I mean, this is something that we should focus on. So what do we expect from the rest of the world? We are now seeing that the former Soviet Union is imploding in so many ways. This will be a big crisis area. And the question we are discussing now is which country will implode first. And I will not go into that now. In Latin America, we are seeing that Argentina has already started improving. Brazil is going into the right change. Venezuela will clearly crash, but half of the countries are on the right track. Mexico, Colombia, Peru, and Chile. So we are seeing Latin America as an example of where to go. While the former Soviet Union is a crash, East Asia is just slowing down, And of course, the Middle East, as we heard in the last session, is a big mess. How can these countries catch up with the West? So I see no further convergence, or very little of it. Instead, a divergence, or you can call it the middle income trap. Most of the emerging economies do not have sufficiently good governance. They have to go back and get that right. And how China will improve its governance is more than I understand. Thank you.
Thank you. Thank you very much, Anders. Just one question. We'll come back to this, but you didn't mention negative interest rates at all. Does that have an impact on the way you see the world, or is that a phenomenon that you think that is going to just pass very quickly?
I think that negative interest rates are wrong. I don't see how banks can make money if you have negative interest rates. And the idea of bank regulation is that banks should not give too risky loans. The idea of negative interest rates is that banks should give risky loans. Seems to me to be a complete contradiction. And if banks can't make money, then they will go under. And then we don't have any source of financing for small enterprises and consumers. It seems to be a flawed thought that should be abandoned.
Right. Going to you, Prime Minister. The picture that we see is not going back to the fast growth that we saw a couple of years ago, but still, if we listen to what the solutions might be, smartest places, creativity, freedom, I suppose you're more or less in line with what Anders was saying, or please.
Well, I fully agree with Anders in this respect that good governance is very much needed. Convergence doesn't happen for itself. You have to work for it, and you have to work hard for it. Of course, as you mentioned, the world economy predicted growth and even the current growth, which is around 3%, this is a fact. This is most probably a fact for the future as well. But this isn't the thing that we shouldn't fight in a way, because I'm quite sure that it's not satisfying neither the needs of the developing countries nor the needs of the developed countries. Before going to this diagnosis, or just trying to explain what the economy from my point of view looks like right now, I think it's quite necessary to make clear a distinction that the developed countries are not a homogeneous mass in a way, and the developing countries are neither. If you look at China or Brazil, you see huge differences, and take then India to that, the picture is very, very diverse. So anything we say about developing and developed countries is a simplification, as explaining economy often is. Now, it's right to say that crisis back in 2008, 2009 started from the developed countries. And we were believing before that, we are resilient to crises because we have very good governance, before we have lots of mechanisms in place. Well, we were wrong. The crisis rattled markets, the crisis caused financial distress. It, was it all because of the Lehman Brothers? Well, clearly not. It just was merely a trigger showing that so many developed countries had practiced excessive deficit, had led to excessive debt that Anders correctly, I believe, mentioned to be a huge mistake in the past. And we can rightfully say, and now I'm not being very politically polite as a prime minister, but let's agree that here at the Lennart Meri conference, this is very much allowed, as Lennart Meri did not always stick to the protocol and political correctness. I think it's fair to say that most of the developed world were living at the expense of tomorrow and even at the expense of future generations. And being, in the beginning, slightly more pessimistic, which is not my nature in general, if we look what was the debt level before the 2008-2009 crisis, it was 70% of GDP for all the developed world. For Eurozone, about a little bit less, but still close to that figure. And if you look what it's now, For the developed world, it is more than 100%. The debt level is about 46 trillion, and the economy or GDP of developed countries is 43, so it's about 105%. So in this respect, the essence why we were in crisis 2008 and 2009, this is not gone. So yes, we can postpone fiscal consolidation with very cheap money, but we can't postpone it forever. So this is my point number one. Now, before going to China, which is something that we are supposed to talk about as this was in the title, let me say also that United States' role remains very important. The aspects of somewhat tightening monetary policy will be felt in global economy. Also, the noticeable trade deficit is something that is very important for other parts of the world. So just very shortly, but US economy still matters a lot. Now about China. We have witnessed exceptional growth rates in China for, well, let's say all my lifetime. During my life, China's GDP has grown about 25 times. Not 25%, but 25 times. And I'm, as you said, still the youngest prime minister in EU, which means that I'm quite young in the global context. So 25 times growth during that. And 25 times growth is not just a number of statistics that economists love to talk about, but this actually means that millions, many millions of people have been lifted out of poverty, have been brought to global consumption, global economy. So that has been a historic thing during the 25 years. China, of course, still matters. And even though we are witnessing the growth coming down, it's still estimated to be around 6.7. Well, some say that more accurate is 3 to 4%. Well, hard to argue, but nevertheless, we are witnessing somewhat slowing down, and we know that 10% probably is not going to happen for the next decades. If I can suggest something that should be done in China in order to grow more and have more balanced growth, I would argue that there is a need for more consumption-led growth, which is not something, for example, that would be the argument for Estonia. But for China, the consumption-led growth instead of credit-led and investment-led growth would be an argument. But we can discuss about it later. And of course, with China, we still see a lot of risks to the global economy, because if the decline is faster and deeper, or not decline, but declining growth rates, than we predicted, the spillover will be felt by others quite severely. Now, very shortly about commodity prices, as it is a very serious fiscal problem for those who export oil and other commodities. The accumulated deficit for the next 5 or 6 years will be around $1 trillion almost in US dollars, which means that they need to do something about their budgets, because it wouldn't be sustainable to keep this kind of deficit. But of course, we have to keep in mind that it is a clear domestic consumption driver for most of the developed world. So we have more money, to put it very simply, we have more money to consumer goods because of cheap oil and commodities. Now, what will happen in the future? This is the easy part. Economists are good in two things: telling what the future of world economy will be like, and then afterwards explaining why everything went differently. So, I will try to be very modest about saying what the future is like, even though I'm in a company where there are really very, very distinguished economists and who might say anything about the future. But as a politician, I can somewhat, who takes some interest in economy, let's put it this way, I can say what I believe needs to be done. And of course, it's a simplification, and then there is no similar medicine for all. But I think that in general, we should put less weight in economy from the government side, which means that there is a very clear need for growth-friendly fiscal consolidation in the developed world, which means tackling the legacy debt, which still is for some countries 20% or 15% of their state budget, paying back the legacy debt. or servicing the legacy debt. So, of course, they cannot invest this money that they take from the public in the form of taxes to the future projects. This is quite clear. Secondly, well, this is easy. Any politician coming to talk about the economy, they say, we need structural reforms. Well, this is no-brainer in a way, because it's true, but not to tell only about structural reforms as a magic word. I try to be more precise and give a few particular examples. First of all, we need more work participation, more people to work. Demography in the West, in the European Union, in the US, is definitely playing against us because it's declining, it's aging, and so on. So we need to address the problems like youth unemployment, also retirement age, and let's say work participation in somewhat later stage of life. Also, people with health conditions should not be sent home for the social benefits. If they want to participate, if they are able to participate, we should help them to participate. It will make all the difference. And secondly, this is something very unpopular to say, but this is something in Estonia what we are doing is the balance between sectors has to be in place. If the population is declining, we cannot afford more people in the public sector, because then there will be even less people in the sector that actually is contributing to the GDP. Of course, there is a need of R&D and innovation, and I thank you for the compliment that Estonia is among the highest contributors in EU, but our aim is even higher, and I think both private and public sector need to tackle innovation more. The only way to get to the fourth, or some describe it as a sixth wave of innovation or of progress, I think is to invest heavily and take it seriously. Also, of course, the universal truth, very simple again, is more trade. In theory, we have a common market for EU, but for 500 million. And for Estonia, coming from 1.3 million and opening the market of 500 million, it made a huge difference. But I would argue that this common market is still not complete. And we have big steps to take to have a really common market, no obstacles between trade and free movement. And secondly, well, we shouldn't stick to the 500 million. We should have free trade with US. I'm a strong supporter of TTIP, not only politically, but as a person who takes some interest in economy. Of course, I do not have any capacity to comment what will happen with the monetary policy, because I would be heavily criticized because of that if I do. But I do understand why there is an interest by the central banks to keep the interest rates very low. We see that the growth is still very low and the debt is still very high. But they cannot postpone our work as governments to the future forever. So I would argue that we need to start reforming in all of European Union and developed countries, and we can't rely on the ever low interest rates, because as you correctly said, there are downsides of the very low interest rates as well. Thank you.
Thank you, Prime Minister. One question, if I may. There's a lot of talk about tax systems and tax avoidance and that sort of things in the world. Now, some people have suggested that a very simple and transparent tax model that Estonia has could be a solution for others as well. Are you willing to make that recommendation?
Well, as a Prime Minister, I'm in no position to tell any other country what to do. We can only talk about our experience. And the experience has been that, well, with these Panama Papers, there are very low number of Estonian companies there, and there's a reason for that, because it's cheaper to pay the taxes in Estonia than to go to the other side of the ocean and try to figure something out how to trick the governments. So keeping the tax system growth-friendly has a strong argument. And even if there is a need for certain percentage of public income, which nobody denies, there are differences between taxes some taxes are much more against economic growth than others. So if the trend should be, in my opinion, decreasing payroll taxes, taxes on corporate investment, and if there is a need to increase something, then either harmful consumption or some sort of property, depending on the country.
Thank you very much. Let's move to Alan. Alan, two small things, China and oil. Would you like to tell us a bit about those?
Simple things.
Where do I start? I suppose you could say China, oil, are they connected? And I think I'll explain in a second. They are indeed very connected. But I suppose where we start is Goldman Sachs' great observation in 2007 that the way the world was going, we were going to end up with oil at $200 a barrel. So you can always rely on Goldman Sachs for a great forward-looking analysis, I feel. But what they were looking at the time seemed relatively sensible. And this is where the China element comes in very substantially. The argument was that there was going to be, or there was, a structural increase in demand caused by China. Suddenly you have this huge continent with large numbers of people engaging with the world and growing at an enormous pace. I mean, the stat is quite amazing. In 1979, the GDP of China was $176 billion. And in purchasing power parity terms in 2015, it is around $11 trillion. Now, that is some significant increase. And of course, you do need a lot of fuel to run a much bigger economy, 26 times, as you said, larger than it was in 79. So there was this structural increase in demand, and a lot of the arguments about an increase in oil prices was based upon China. And the other argument was that there was peak oil, so this was going to make things even worse, that you've got this country which is going to need huge amounts of oil resources, and we're going to have less oil available. So you can see where Goldman Sachs was coming from. The problem is that, first of all, peak oil has turned out not to be entirely accurate. And the major driver of this has been, of this realization, is shale. And the shale revolution in the United States, starting with shale gas and then moving into shale oil. So the United States, first of all, replaced Russia as the world's largest natural gas producer. And then it proceeded to become one of the three great producers of oil, the 10 million barrels a day producers, with Saudi, Russia, and the United States. And this is of enormous geopolitical significance. I mean, the traditional view was the 80-10 ratio applied, that 80% of all of the oil and gas on the planet came from OPEC and Russia, and 10% from OECD countries and China. And the 80-10 ratio has been imploded by the shale revolution. But we're only at the start of the shale revolution, because the reality is the shale revolution remains almost entirely American in this decade. But as we go forward towards the next decade and into the next decade, the shale revolution will go international. And it may well be that the Europeans get very difficult about fracking, so they don't do it. But the rest of the world will do it. China, interestingly, has about 35 trillion cubic meters of potentially recoverable shale. Now, not all of that will be recoverable, but they will work a way of dealing with that. And the rest of the world has a lot available too. And that technology all the time is getting better. And this is just focusing on the American shale base for a moment. One of the things about the Saudis have found quite shocking is the extent to which, despite the fact that oil price has fallen, the shale oilers in the US have continued producing. And this is partly because the technology is getting better and better and better. So they're able to get it out at lower and lower prices. And partly they're able to choose where to go. So if you're able to look at the geology and spot on those parts of the oil and gas geology, which is the easiest and cheapest to get out, and you focus there. And when the oil price goes up a bit, you open up more of the field. So you're able to choose the spots which work at different prices along the oil price spectrum. This allows you to survive and prosper and continue, which was not originally supposed to happen. The other point about it is as the technology is getting better and it's exported worldwide, you'll get lots more cheap oil available. So I think we are for a very long cheap oil range as the shale revolution goes international. And then the other factor is China. And this is the China issue which comes in here. And this comes down to the fact that the great surge of economic growth over 35 years was driven by low labour costs, a huge underemployed pool of labour, and the capacity to spend enormous amounts of capital on infrastructure, and that infrastructure generating economic growth. Now the trouble is incomes have gone up, so they're no longer as competitive as they were. The bulk of the labour has moved into the cities, and in fact now you've built all the bridges, the ports, the railway lines, which will generate economic growth. So now China is finding, although still it's continuing in the same patterns as before and trying to spend more capital to generate more growth, they're having to spend $4 to generate $1 of growth. And this is not a route to happiness. I mean, to give you some sense of the dangers for China, currently Chinese total debt, that is local government, central government and corporate, is 283% of GDP. Now, if you think that's a killer stat, let me give you my second killer stat, that 3/4 of that debt has been incurred since 2008. And that, I think, is the danger here, that they're generating so much debt, which is not actually creating economic growth, that you're looking at a significant degree of stagnation going forward. And this underpins a lot of what Anders has just said. And the reason for a lot of this is that, because of course the Prime Minister is right, what they should do is they should develop consumption-based policies, they should have capital efficiency, they should look at green technologies, they should move up the value chain, they should go in for services. But the problem to do that is you need to have a much more freer, open economy. But that means the Communist Party losing control. And I think ultimately, if it's a choice between power and growth, the CCP will choose power. And it deforms the way they look at the economy. So one of the things you've got to try and keep everything going is spending more capital to create more jobs in the traditional industries. So that's why currently people talk about steel. The steel industry is now represents 50% of global production, but also flat glass, 50% of global production is Chinese. Aluminium, 50% of global production is Chinese. Similarly with various chemical sectors. I mean, one of the questions I have for the Chinese government is, where are you going to stop? Are you only happy with 100% of global manufacturing markets in the hands of China? And this is all basically because the Chinese Communist Party can't bring itself to reform. The other elements of this, and I'll give you an example with this very hotel. The Radisson Group has just been bought by a Chinese state-owned corporation, HNA. So this is now a Chinese-owned entity. I'm not particularly worried about them owning a hotel. But why is this being done? This is being done, I think, in part because a lot of the Chinese state companies recognize that China is in trouble. You buy a lot of assets abroad because they'll be worth something when things go wrong in China. Another strategy is the acquisition and lockdown strategy. I think this is a particularly disturbing issue in terms of international trade, is that you buy a Western technology company, then you lock down the rest of the Chinese market to any Western competitor. You stuff it full of cheap cash to grow it, and then you've got a kind of global competitor with actually no competition taking place. And the problem with all this dysfunctionality in the Chinese state, I think, is, and Chinese trade policies, is that it's very, very difficult to argue that any of this is free trade. It is not free trade. You're not being a protectionist to say there is a problem here if the Chinese State Council tells the Chinese state banks to provide the Chinese state companies with huge amounts of capital, which on no economic justification you would actually provide, to increase production in order to keep the Communist Party in power, which results in steelworkers in Pittsburgh, Wales, and the Ruhr losing jobs. Or equally, the idea that you have an acquisition and lockdown strategy which has got nothing to do with ordinary free flow of competition. So one of the issues I think we're going to deal with is not just the stagnation of the Chinese economy, but we're also going to have a very, very serious conversation with the Chinese about their trade practices. And this goes beyond whether you have market economy status, which clearly should not be given, but it's a much more fundamental issue about the way they're behaving. We understand their political problems, but they can't export their political problems on us. I think that's something we're going to have to really grapple with.
Thank you, Alan. So no market economy status to China. Let's go back to that a bit later, but you are actually making an argument that what's happening is not free trade. So why is WTO so toothless?
Well, can I actually come back to that?
Okay. Please.
Article 9 of the protocol, which is not... everyone talks about Article 15, and which I'll come back onto if anyone wants me to give you a legal answer to Article 15 and the dumping issues. But Article 9 says that China commits to becoming a market economy. Now, whatever you say about it, China is not a market economy and has failed to comply with Article 9 of the protocol on accession. So, so before we even get to whatever else, the fundamental obligation of China, as part when it signed up to WTO, was to become a market economy. That's what they signed up to, and that's what they have not complied with. So I think we have a fundamental basis to argue with the Chinese that whatever you say about what we should do in our trade negotiations, you haven't done what you agreed to. I think that is the starting point for any negotiations which the EU or the US has with China in relation to the WTO.
Hugely interesting, and we'll come back to that. But Sergey, on China and Russia, maybe a bit of technology as well. Do you agree with the worldview that that is being painted, that no fast growth, that we have to have new innovations, and even that China and Russia are going to be hurting quite a bit going forward? Is that how you see the world?
Yes. Generally speaking, I believe that the last 50, 60 years of the global economy, when it experienced growth of 4% or something like that, it is unprecedented in the global world, and I argue it will not be repeated. Because this fast growth was driven by two major factors. First, it is globalization. So we may like it, we may dislike it, but starting from mid, maybe 60s, beginning of 70s, global economy started to be globalized. And for businessmen, it doesn't matter. You have a headquarters in Tallinn, you have your production facilities in Brazil, you purchase raw materials from Indonesia, Russia, and Angola, and you sell your goods in United States, and you have your banking account in Switzerland. And you stay in the hotel room here in Radisson Blu. That's the global economy. Global economy means no borders. Yeah, and that is the problem, that economy became globalized, and of course business who is looking for profit, they are looking for the cheapest options. And the result of those 40 years is real globalization. So many of industrial processes were globalized, and I doubt if there are many companies in the world that are concentrate their business in only one country. Second, what is really as well important, and my colleagues have touched it, it is in those 40 years, globalizing economy got access to de facto unlimited cheap labor pool in China. It was really unlimited. Even today, look, in 40 years, something like 600 million Chinese people moved from villages to cities, 400, and there are another 400 million who may do it. So today, the level of globalization in China is approximately 50%, and if they follow the pathway of South Korea, it will reach 70–75%. So, in fact, this unlimited labor pool is unlimited. If global economy needs more labor, it exists. The problem is global economy does not need it. But in those 40 years, global economy benefited, and that's why that was the reason for the fast growth. Anders said that global economy grew rather fast in 2003, 2007. I would say that it is normal overheating. The problem is much more easier to say we see overheating in the national economy because you have much clear indicators, you may measure it. In the global economy, statistics comes too late, you make the conclusions very slow, and there is no global governance, no one is charged, no one can control it. But nevertheless, the result of this overheating was crisis. Yeah? And for many economies in the world, we know that overheating leads to crisis. And the crisis of 2007, 2008, 2009 is not past yet. So the world in which we live, the developed economies, the world of low interest rates, it is the result of the crisis. And I'm not quite sure that United States, Europe, Japan, they may leave the zero interest rate policy immediately. Look on Japan. They have spent 20 years being this, not secular, but generation stagnation. And they are not able to leave this situation. So we can draw a scenario, we can design a scenario where Europe and the United States will continue to stay in the same position as well. So I would say that there is nothing given that a global economy will grow up fast enough. Moreover, we can be sure that despite anything, developed world, United States first of all, Europe on the second place, they will be technological driver. And they will be technological leaders of the world, and they will determine the future development of technologies, the future development of industries, and of the global economy. But China is definitely will continue to play a bigger role. And as I said, to my mind, urbanization will be the main factor. It is inevitable. It may be slower. It will definitely be slower than in the last 40 years, but rural population, they have nothing to do in villages. They cannot produce more if there is a genetic revolution in rice. So if, it's a little bit of technology, I will jump maybe, that photosynthesis is the basis of the plants, and the efficiency of photosynthesis is different in different type of plants. And for example, in soybeans, photosynthesis is 3 times more efficient than in rice. If you are able to produce the same efficiency of photosynthesis in rice, you may crop 3 times more of rice in the same areas. So it is going to be done. It's not the day after tomorrow. It is maybe today or at least tomorrow. Yeah? And that means that productivity in the rural sector, productivity in agriculture will jump everywhere in the world. And of course, China will not need such a huge labor pool in villages, and it will go on to cities, and that will increase inevitably, that will increase Chinese private consumption. And that will help Chinese economy to grow, maybe not, of course not 10%, and maybe not even 7%, but 5%. I believe that Chinese economy in the medium-long run will continue to grow. In the short run, we agreed that we look on the horizon, let's say 2 to 5 years. I completely agree with Alan that if we take standards of the developed world, Chinese economy is the edge of the collapse. So the so huge, so fast growth of the credit, $4 of credit to $1 of GDP, not investment, but China sponsored, influenced $4 of credit growth. 220% growth to GDP ratio, it's a collapse. 15% of non-performing loans in the banking system, it's a collapse. Anyone specialist in the banking supervision, the developed world will say, okay, it's tomorrow. We should take care of the financial system. But we don't, okay, $600 billion of capital outflow last year is 15% of Chinese GDP in 1 year. So it's definitely the financial system should collapse. But it's not. At least at the moment, but it may. I agree. And if it happens, of course, the price will be tremendous for the whole world, and we will pay it. And of course, we will forget about not 3% of GDP growth, but maybe even about 2%. But I want to make a good news. Let's say I think that of course Chinese leaders, they are not as dumb and not as stupid. Of course, they see those problems and they try to solve it. And they know very well weaknesses and strengths of the Chinese economy. And me personally, I believe that their idea of one belt, one road, it may be a huge transformational idea for the mid-Asia. So today, the railway cargo from Istanbul to Tehran may take you up to 6 days. because different railways, different stops, customs and so on, duties. And if they build railways, if they build power generation, if they invest in basic infrastructure in telecommunications, that will allow to unite this area, to strengthen cross-border trade, to get access to natural resources of this area, and that will allow China to invest its capital. So today they have no choice. You cannot switch economy in one day overnight. Let's say today is investment-driven, 50% of Chinese GDP is investment, to consumption-driven. It will not happen overnight. But if they will find a way to invest their capital in the mid-Asia, and if they will be able to promote with this idea of One Belt, One Road, I think it will be transformation both for China and for this region. The last point maybe I see that on oil, 2 points, sorry, on oil. We know about Uber. Yeah, we have in Tallinn. We know about Google Car. It will be on the market in 3 to 5 years. Just combine one and another. And 10 years from now, in all major cities, Google has built a partnership with Fiat. General Motors is built in partnership with someone else. So these self-driven, let's say, computerized managed taxi systems emerge in global cities. The number of the cars is declining, the consumption of oil is declining. Plus, add to this Tesla with electric vehicle, and you see that the consumption, that the potential consumption of oil will go down. It's not 5 years. It's not 5 years, but it's a global trend, and it will continue. More than 50% of world power generation installed in 2015 was solar. That means this transformation is going on. That is the trend. In the United States, you cannot build any new power generation if it's not solar. So only solar plays. So that's it. That's the transformation of the economy, and that means less demand for coal, less demands for oil, and that is the trend. And the last point, technology. Technology. I think that Prime Minister said that the lack of labor may be a big problem because of demographics. I think we should not forget about robotization that is ongoing, and we should not robotization. Maybe it's not as a huge impact. Not be a huge impact on countries like Estonia, on European countries with a huge share of services and less of industrial production because it's normally blue collars. But let's not forget about artificial intelligence. Today in the United States, IBM, well-known company, runs Watson machine. Watson machine is diagnostics of lung cancer. And no one doctor in the United States is working with no access to this system, because it makes much better prediction, much better diagnosis than any doctor in the world. So, and that is only a problem of time when computerized system will take responsibilities for diagnostics of all population. Yeah? So that's about how world is changing. That's about technology. And the last point, that's really the last point. Sorry. No, I am the last on this panel, and we have costly wars in the title of our discussion. Wars are costly. Wars are costly despite what is the reason for the war. And we may see the price of the war. It is tremendous increase in budget deficit like in the United States. It made the destabilization of regions like in Iraq and Libya and growth of ISIS. It may be millions of refugees in Europe like crisis in Syria. It may be technology, it may be sanctions and delay modernization and the growing technological gap in case of Russia because of Donbass and Crimea. But wars are costly. And the more we spend on wars, I understand all reasons for discussions during this conference on resistance to Russia, on military threats and so on. But we have to understand, the more world in general spends on wars, the less we have for growth. Thank you.
Well, thank you. That was fantastic. Now let's move to discussion. I will give you all a chance to respond to anything that you'd like very quickly, sort of 1 minute type of thing. And then I move to all of you. And the ideal way of answering, posing a question is one question. And if you can direct it to one of the panelists, the better. But let's start with one question per person. But first, are there any reactions? No? Yeah? Please,
Just
Prime Minister.
try to be very brief. I fully agree what you just spoke about this revolution of shale, and this also has, of course, a geopolitical factor. As we know, European Union is very dependent on oil and gas, especially coming from one direction only, and the US role in more production has potentially a very positive geopolitical dimension in addition to this economic factor. Secondly, fully agree that globalization has enormous effect and has had enormous effect on growth. My question is, has it run out of further potential? As I explained, I think that we still have barriers. If there is any German in the room, living in Germany, well, I don't see any hands, but if there were, buying a BMW in Germany, you would need to pay tariff of approximately 10%, because if it's an X series, let's say, that is made in US. So this still shows that there is a lot of room. And final point on the lack of workforce, and I fully agree that the amount of robots purchased since 2008 has doubled. So this is a clear trend, even though the overall economic activity has not coped with that so fast. But I was not so much talking about the lack of workforce in absolute terms, but more like the balance. How many people are in the productive sector and how many are in the unproductive sector, so that how much weight do we put on the economy from public sector, from people who are unemployed and so on. That was the point, more like structural issue. Yeah.
Alan?
Just briefly, one of the things Sergey raised, which I think is very important, well, could be very, very important, is what Elon Musk has done with Tesla. Because if they are able to get a usable battery-powered car off the stocks working, it has tremendous consequences. One of the real difficulties is that, at least in the short to medium term, we end up with not being able to still use renewables to generate the electrical power. It'll take time for the technology to catch up, so renewables can really provide most of the electrical power at scale. But what it will do in the short to medium term, as you were suggesting, it hits the oil market really hard. But what it would do in the short to medium term, it will help gas. And it will make gas, in many ways, the much more important strategic energy fuel between now and the 2040s, before we bring on the technology. Because the fundamental trouble is, even with solar, you need backup. And because the trouble is, batteries, okay, but you need them at such a scale if you have real system backup. It doesn't work. You're going to need the fossil fuels. You're going to need some form of fossil fuel, and gas fits the bill. So gas becomes strategic fuel, not oil. And that will be another real geopolitical game changer in all of this. And it strengthens the United States.
Yes. And it's not only Tesla. Does everyone know what Hyperloop is? Yep.
Yeah.
Hyperloop is the tunnel, shuttle tunnel, the electromagnetic that takes people and goods with 1,300 kilometers per hour. So if we create systems of that sort, then the transformation will be grand indeed. Yuri.
Yuri Luik, ICDS. I have a question. I wouldn't direct it to anybody specifically, but is there a risk that we are, in our discussions, far in the future, but the populations are not following us? And the best example is, of course, the United States. We are now having a situation whereby, you might say, the majority of people who are planning to vote in the next presidential elections are suspicious of globalization, are suspicious of the pillar of the globalization, which is free trade. And actually, in one way or another, would like to sort of turn the wheel back. How would we fit this phenomenon to the optimistic approach to globalization? Thank you.
Okay. Anders was quicker, and then Alan.
What we have not discussed here, which is very important, is increased inequality. which is very striking in the United States, less so here. The new technology means a winner-take-all situation. Silicon Valley is very much the winner-takes-all. So we have these multi-billionaires who reach there when they're barely 30. I mean, Mark Zuckerberg being the case in point in Facebook. And this is normal market development. Think of pop stars. They used to be many and spread out. Now they are few and they reach everybody through technology. And why shouldn't it be like that with university professors? There are some university professors who are real top stars. Why do they only lecture to one hall? They should lecture to tens of thousands of students with modern technology. And what happens to all the others? I mean, the Trump phenomenon is very much the white working class that is not keeping up in education. It was Lester Farrow who said, if you have a third world education, then you will have a third world salary. This is what we are seeing in the United States, and this will, of course, develop in Europe also more. So if most people are losing out, why should they vote for it? I think that this is the fundamental dilemma of populism.
Alan.
Right. I actually think this fits in with some of the stuff I was saying earlier about China. I mean, one of the difficulties is in defending free trade, is that if you have a trading partner like China, which is not playing by the rules, it is very, very difficult to defend free trade to your population. And I think when you actually, say, dig down into a lot of this, I think part of the trouble with the West, to some degree, has been that, you know, the Chinese, if you look at the Chinese state and the Chinese markets, you have what looks like a stock market, you have what looks like regulations and private companies, but when you actually understand that most of the companies are owned and controlled by the state and the Communist Party, that the stock market is manipulated, that the regulators are controlled directly by the central government, you realize that it isn't a market. But what we've done is we have, to a very large degree, accepted the, if you like, the facade of the market and the promises of free trade, which have not been delivered. And to a degree, we have sacrificed our own populations. And that makes it very, very difficult to sustain an argument about free trade. Mm. And I think that's something which is something I suspect the great difficulty with all of this is that the political classes at a very senior level don't want to engage in that argument because it involves having a very difficult discussion with the Chinese. And I think that's where, that is, I think, at a very fundamental level, the problem here.
Prime Minister.
Yes, well, thus of course there are imperfections, but I would argue that there is no better model than market economy, including trade, including globalization. No. Lots of people in the room, Estonians, Russian, Georgian, Ukrainian, Latvian, Lithuanian, we all have a very unique and very painful experience that planned economy did not work. Mm-hmm. And if Americans don't trust, or any other in the developed world, don't trust our experience or our words saying, well, just go to Cuba. Look how planned economy works or doesn't work. You go to the shops for local currency and what you can buy. This is a very good or very sad model of planned economy still suffering in a way. So there is a reason why in our country there is no communist party. We would never want to go back there.
Right. We have a question here.
I have a question. Rise of labor costs, and not only in China, but we should look broader at Vietnam, Thailand, and other countries, will influence the situation in the rest of the world. The Chinese production, broadly speaking, have eliminated the production in Europe, particularly in the south of Europe, textiles, look at textiles in south of Italy, also in the United States. By some estimations, the increase of cost production of this basic consumer stuff would increase the consumption costs in the Western world by up to 15%, with obvious influencing the situation of the middle class in the United States and some low-income groups all over the world. So would you please tell me, would that lead to reindustrialization to some extent in the Western world? I've discussed this with Alan, and he said three-dimensional printers will solve it all. I don't think so. It's not a mass production yet, maybe in 10, 15 years. But this is a very important question concerning how the Chinese development will influence us. And the second very simple question to Alan directly is interdependability between China and the United States in financial terms. Mm-hmm. How this will influence the situation in the US with such a huge debt being held by the Chinese.
Sergey wanted to go first, and then...
Look, first of all, deindustrialization, it takes place. If you look backward in the beginning of the 20th century, the share of agriculture and industry and transportation were close to 100% of GDP. Nowadays, it's less and less. And the global world, any country in the world, the share of industry is declining. So it is inevitable. And the share of services is growing. I was really surprised when I looked just on some news. My kids told me that, for example, in Ukraine, there is a family that produces clips for YouTube. Two series. One, adventures of their small boy, another of his sister. They have millions of subscribers, and they earn $20,000 per month because of advertisement on YouTube. It's not industry, but it's going on. And more, and that's services. That's global economy where going on. You are right. Rising labor cost in China is a problem for China. So there is no need in China labor pool anymore, and that is the problem. And global companies, they may move their factories, their capacities first to Thailand, to Vietnam, to some other countries. Sooner or later, they will reach certain level, and they will start to compete first with American, with US labor, and then with European. Europeans, sorry, later you will be last. Because in the recent, Alan may correct me, but in the recent 7 years, as shale revolution took place, America became competitive in labor force creation because of cheap energy, because of cheap gas, because of cheap electricity. Yes, labor cost is higher, but energy is cheaper. And they invested something like $200 billion because of cheap gas, because of cheap electricity. And that's will go on. As I said, this very limited period of time when enormous cheap labor pool emerged in the global economy disappeared. It's over. Nowadays, countries will start more balanced and more competitive. And deindustrialization, it's a fact.
Anders, sorry, but then Alan, you get to come later.
Yeah, 2 points. First, the service sector is all dominant in the modern economy. And service sector is to considerable extent a business service sector. So a large share of the modern economy is highly qualified service jobs. And therefore, there's too much of stereotyping of the importance of manufacturing. So we should focus upon the modern economy, which is not necessarily manufacturing, which is naturally declining because that's where you can rationalize the most. That's not a tragedy, that's an improvement in the standard of living. The other point is that the big word today in the United States is insourcing, not outsourcing, because 3D printing is already very important. There are many things that are being produced thanks to 3D printing, and this completely reorganizing production. It means that you can have production spread out where you want to have it. You don't want to have too much of the problems with logistics. 3D printing is one of the means of minimizing that. You want to get rid of certain uncertainties in transportation. So what we are seeing is that the West comes back to itself.
The West is back.
we are seeing that unemployment is 5% in the US. It's 10% on average in the European Union, because what does the European Union do? Southern Europe does not educate people properly, neither vocational training nor enough of secondary training. Portugal has 42% of its labor force having got secondary education. If you have third world education, you get a third world salaries, or if you are trying to get higher, then you get more unemployment. The other part is that Europe has too high a fiscal burden. Who bears the fiscal burden? Not the enterprises, they flee abroad. Not the rich, they flee abroad, either themselves or the money. So it's the payroll taxes and the income taxes that are too high. If you don't do as Estonia, I mean Estonia, Bulgaria, Romania, Lithuania, Latvia, these are the 5 countries that have really good tax systems. So the high European unemployment is caused by old social democratic social welfare policies that should be abolished, which are not just punishing young people who can't get a job. This is what we have to stop.
Alan.
Yeah, to some degree, I'm going to reinforce what Anders has just said, because if you look at what's happened in the States with the onshoring or the reindustrialization, with this powerful effect of low energy costs. And what's really interesting is that it's triggered a discussion in US industry about the fact that actually once they started bringing things back because of rising Chinese labor costs and falling US energy costs, they started realizing that actually with some technological application as well, they could make onshoring or reindustrialization work even better. So you've got an entire process now being triggered by the initial onshoring, which has actually grown. The other element to it is 3D printing, and the ability to look at how that can be applied with all these approaches to onshoring. So what you're looking at, and one of the real questions I think for emerging markets, which is quite disturbing, is if you haven't emerged or you're in the process of emerging, you may well be the last group of states which can use the old traditional economic development model, because it won't work in the future, because the advanced countries will do all their manufacturing at home using high-tech 3D printing processes and a value approach to industrialization, which will keep all the manufacturing at home. So I think that's one of the real kind of potential changes out of all of this, which is probably good for the West and not so good for other places.
Let's change the rhythm a bit. Let's take 3 questions, and then you have a chance to answer them. Let's start there, and then we go here, and then we go there.
Yes, Paul Strauceps. I'm a journalist at the weekly magazine Meri in Latvia. I wanted to follow up on something that Mr. Aleksashenko said about technology, AI. There's a famous McKinsey study, I believe, a couple of years ago that predicted that close to 50% of US jobs are under threat by technology. We see that the political economy, the support for the liberal economic global order is collapsing in the West, in Western Europe and the United States, or is under threat, certainly, by political forces. Those billionaires in Silicon Valley, some of them have founded a think tank to explore the possibilities for guaranteed minimal income, simply paying everybody a living wage, whether they work or not, because they see technology destroying so many jobs. And so my question for you is, in view of these technological changes, do you think that the proposals that we heard here, good governments, structural reforms, better education, are they enough? Or do we have to think outside the box, especially in view of the populist threat that we're seeing? Thank you.
Right. So living wage or basic income type of thing, and then let's go here.
Charles Hello, News Pasternak, Finnish Institute of International Affairs. I can't resist asking, mainly Anders, is there a way to better reconnect the financial banking system to the real economy?
That was a simple question. I'm sure it will have a simple answer. Please.
Al-Olim, visiting fellow at Brookings Institution. My question is to Sergey Aleksashenko. What is your advice to the Russian government with this very positive, I think, optimistic view that has been presented here of the world economy, although albeit with huge dangers on the horizon? Evidently, it's one model which is not going to survive this development if it goes on as it has been predicted by you. Thank you.
Excellent. So we had 3 very good questions. First, on is there a need to rethink living wage or basic income, that sort of system? And then how to connect or reconnect the real economy with the financial systems that we have, and then advice on what advice would you give to Russia? Who wants to go first? Prime Minister.
Well, regarding the first question, I would strongly disagree. I think there is not too much liberal democracy and liberal economy, but too little. And the imbalances and imperfections come from governments creating obstacles for the market or just behind the market. I would argue that there is no serious alternative for market creating the prices. Again, coming back to planned economy, we saw the real extreme, what it was to planning committee saying that clothes for women cost this much, clothes for men cost that much, you produce this, you produce that. You know, what happened? Deficit. The deficit for us meant not the fiscal deficit, not so much, but there simply wasn't anything in the shops. So really don't want to go there, and this doesn't work. And actually, market is the best driver also for the price of labor force. So guaranteeing minimum can be a social question, of course, to tackle poverty, to tackle living standard of creating some kind of absolute minimum. But purely economically speaking, I see clear dangers if we want to. The most uneconomic thing I have heard, uneconomic policy is simply to pay people to stay out of workforce. This is very, very dangerous in a way. So that I would seriously object, and I think, of course, there is a need for a social minimum, and nobody is arguing. But macroeconomically speaking, there is a clear threat that if we force people, and we can force them in a way with too high social subsidies, whatever form, if we force them out of production, that will be creating macroeconomic imbalances, clearly.
Anyone else?
I'm happy to follow Sergey.
Okay.
After Sergey.
Okay, thank you, Andres. Look, first, I would not say it's a threat to liberal democracies in the United States, first of all, but there is definitely growing difference, growing gap between Republicans and Democrats. Democrats, they are shifting more to the left, and Republicans, they try to stay on their position, defending liberal democracies and less government. And I would say that I'm not a US citizen, I'm not voting, I have no voting rights, so I'm an external expert in these issues, and that's my, let's say, outsider's view. And on the other hand, there is a rise of populism on both sides. On Democrats is Sanders, and he has his supporters, first of all among young generation, among students who got huge education loans. And as Andres said, okay, if you have the third level education, you have third world job. And they have third world education being in the US in different colleges and universities. Yeah? And they do not benefit from those credits. That's the burden for the rest of their lives. And Sanders said, okay, I have a easy solution to this. Let's make education free. It's a typical, let's say, it's not even European, it's socialist solution, Soviet type solution. That's a populism. And Trump has his supporters as well. So we are unhappy losing our jobs, let's close our border, no free trade. That's once again support of populism. And I think that's a big, two battles at the same time. They are recognition of unoperational character of the US political system. That is, in fact, been in gridlock since 2011, maybe. When you ask on this artificial intelligence, labor, unemployment, I believe you are right. I believe you are right, and definitely there will be a significant shift in employment, in the structure of employment, but it's not our horizon is not 5 years, it's not even 10 years. I would say it's 20 to 50 years horizon. And there was a researcher of, it seems, in Pricewaterhouse, who said that 50% of US jobs that will emerge in the next generation, the next 25 years, are jobs that we cannot describe today. So we don't know what will be the jobs, but they will definitely emerge like they emerged in the previous 25 years. Look back in 25 years in 1990. Who were sysadmins? Yeah? Who were these internet designers and so on and so forth? There was no such people. There was no such jobs. Nowadays there are plenty. And that's why I would say that definitely there will be a problem. Definitely there will be a problem of changing the structure of employment. Some countries, like Switzerland last year, they voted for this universal minimum payroll. Okay, that may happen. That may happen in some countries. I would not reject it. Advice to Russian government is very simple. Just forget about your exceptional character. Look on the best examples. What's the best? What's the best for the country? What's the best for the world? Stop the war in Ukraine. Give Donbass to Ukraine. Let them build their country, their state. The rule of law, political reform, political competition, economic freedom. That's it. That's not. Look. There is nothing strange in this advice. Yeah, it's so evident. And I would say not a lot of people argue about this in Russia, at least. So everyone knows the answer. Even if you read articles or speeches of Mr. Putin, he has all of these bullet points in his speeches. He knows what needs to be done, but he will not ever do it. That's the problem.
Anders, Alan?
Yeah, let me answer this about the financial question about the financial system. This is a big problem in Europe. If you look up on the EU GDP, it's larger than the US GDP, but total EU stock markets are half the US stock markets, and the bond market is only 1/3. Europe has too many banks, and too little of stock markets, and too little of bond markets, and extremely little of venture capital. Venture capital is what drives the most modern economy, because there you can't use loans, because the risks are big. You must have equity capital. You can't use credits. So this is a serious concern. And 40% of the venture capital that exists in Europe is polluted with state money, which means that there are all kinds of objectives which should not be there for long-term venture capital that is prepared to take big risks. And we were already discussing of banks now being mishandled with negative interest rates, massive regulations, and we are seeing how in Russia, Ukraine, Hungary, the West European banks are withdrawing. What we are seeing is disintegration rather than integration of the European banking system, in spite of attempts at the banking union that are not going far enough. Europe needs a real integrated capital market that is becoming more multifaceted. And this is an enormous task that requires many questions, and many of the tendencies we are seeing, particularly in the banking system, are going in the opposite direction and not in the right direction. But coming back to Paul's question, I agree with what Sergey said, but I would like to add, we have heard this discussion many times before, that technology will take out the jobs. And we had that discussion in the 60s and in the 70s. And then it turned out that there were new jobs coming. We have a massively expanding service sector. And I don't think that we should be afraid of not finding new jobs. What we should be afraid of that is that the society is not able to sufficiently fast adjust, so that the labor market is not sufficiently flexible, that people are not sufficiently flexible in their minds, so that that there is education and training available so that people can adjust. And I think that this is a big problem today in the US. You have a very set mindset that we are entitled to such a job, And we are not going to do anything to improve our education. I think you're seeing much more of that in the US today, strangely, than you're seeing, I'm thinking particularly of Sweden. So in many ways, I would argue that I'm seeing more socialist thinking in the last years in the US than I see in Sweden. That Sweden is more prepared to accept the market. And of course, Trump is basically totally anti-market. What we are seeing is really an ideal of the state should take care of you or somebody. And both the populism of Sanders and of Trump is really socialist thinking that I had not expected at all in the United States. I find it truly scary.
Before going to Alan, just to follow up on Charlie's question, one argument for reconnecting real economy with the financial market is fintech, financial technology, peer-to-peer, crowdsourcing, bitcoins, you name it. It's been spoken about as the next great disruption. Do you have high hopes, high fears about financial technology?
Well, if you take peer-to-peer financing, it's very difficult to get it secure. This will probably be the next big pyramid scheme. I think that Bitcoin already is a Ponzi scheme. You want a currency to have a steady value. Bitcoin jumps up and down. You want it to be secure, as a secure store of value. Bitcoin can easily be subject to fraud in internet connections, as we have seen, and it doesn't qualify in any way as money. So I think that Bitcoin is truly dangerous. You can argue that it could be reformed. I think that is likely that we will see it as a kind of payment, electronic payment system that will function more effectively. Fintech, yes, I think that's a real possibility.
Okay. Alan, and then
may I react briefly? Bitcoins, it's not a myth, it's reality. And Bitcoin, as any currency, as US dollar, as euro, as Russian ruble, is based on trust. So there are people who trust to this system, and they are ready to use Bitcoins as a currency. So unless Bitcoin fails as a system, the trust will continue to grow. So if you will see on the exchange rate of Bitcoin to dollar, okay, it's definitely in favor of Bitcoin. And another on financial systems, I think that the last crisis, the crisis of 2007, 2009, has demonstrated how significant are results or how damaging may be the financial system crisis for the whole global economy. So financial systems, they play enormous role, and that's why a financial system, will become much more sophisticated in our ordinary life. And no one supervisor in the world, even the Federal Reserve, even the Russian Central Bank or European Central Bank, cannot be as fast adjusting its policy to the development of the financial market, of the financial system. And that is definitely will be, if not a threat, but it will be a problem for many years.
Alan, your reaction, please.
Well, it's very interesting listening to this idea that, you know, the technology will mean that we won't have jobs and that we need some form of permanent living wage. I was just thinking that if we go back a bit, after the end of the Napoleonic War, one of the worries of the British cabinet was the terrible impact of the steam engine. You know, it was going to destroy all of these jobs, and how appalling it was. And that Britain was going to have this appalling situation where there weren't enough jobs, and all these guys coming back from the war, and you know, the idea that the Industrial Revolution was just about to get going, and there was this thing called the steam engine, which was going to result in railway engines, and that was going to power the British economy into the middle of the 19th century. There was just no sense, understandably, of that. But you get into very easily a kind of Malthusian trap where you think we've reached the limit of human innovation and ingenuity and the limit of what the market can deliver. And I think that's never really going to be the case. And I think fundamentally what Anders says is the issue, the real issue, is for the state to be able to provide the adjustment vehicles, be it education, regulation, providing know-how so that people, and sometimes financial support, so that people can move from being in one economic situation to another. And it's providing the adjustment mechanisms, which is, I think, key here. Just briefly on Russia, I wholly agree with you entirely. We know what to do. I remember in Moscow in about 2003 discussing economic reform and creating a Russian single market in European Russia and Western Siberia, which we could link into the EU single market, how fantastic it would be. And we could do all of these things, and they would have tremendous impact on economic growth, and it would all be wonderful. But the trouble is, he talks about it, but he doesn't want to do it.
Very good. We have 3.5 minutes because we are going to end at 12:30 sharp. And final question to all of you. We spoke about peak oil. Have we seen peak regulation? Are we going towards more market-friendly policies in Europe and elsewhere over the next 5 years? Or are we going to see more populist, socialist policy experiments? So more market, more regulation. What's your take on the future? Who wants to go first? Anders.
I've just completed a book manuscript together with a colleague on Europe's growth challenge. And the Europe's growth challenge is too high fiscal burden. It has to come down. The taxes can't be kept. The taxes on labor have to come down. The big missing market is the service market in Europe. This other market that is missing is a digital market. And of course, the labor market has to become much more free. This suggests to me that we are going to a much more liberal order in spite of tensions over migration.
Who wants to go next? Sergey?
I'm afraid we will see both, and I'm afraid that we will see more government regulation in the United States. And the most probable winner of the presidential campaign, Hillary Clinton, her 174 economic plan is all about bureaucracy. How to make bureaucracy more efficient. Bureaucracy may do better this, this, and that. This, and that. It's about bureaucracy, nothing about idea. But the winners in the competition will be those countries who will bet on market approach.
Alan, and we'll leave Prime Minister to the last word.
Okay, I think being British, I should make a Brexit point. I'm working on the basis that we are going to remain in a member state and David Cameron will win his referendum. But once we've won the referendum, one of the things that the UK usefully could do is push very powerfully for with allies in Estonia, for actually creating a functioning services market. The single market was never completed. The promises of 1992 were never delivered. We have a single market in goods, we do not have a single market in services. And the economic impact of that across the European economy would benefit all Europeans enormously, and we should do it.
Very good. And Prime Minister?
Well, I agree with all the panelists on this issue. I think, first of all, as an optimist, I would like to believe that you're right saying that we will have more free market. There is a need for free market. We have to fight for more market. But, and that's on national levels, that's also on a European level, because this single market is still not perfect, not complete. But I'm also a little bit afraid that at national levels, in some cases, we will also see populism and less free market. But that doesn't mean that we need to, cope with that. We need to fight for more free market in the EU.
Before I let you go, I will tell you that the next session will start right away, so please stay seated. And now I turn to Prime Minister and the rest of the panel. That was a fantastic panel. Thank you so much.